Hey traders, TG Watkins here. It is July 27th, Wednesday, when I'm recording this, and we just had FOMC day. Pretty much as expected, they raised 75 basis points, and then the market kind of bopped around for a little bit. You can see right in here was that decision, not too much, and then it started to really take off. The ticks were strong, the internals were strong. It was a pretty strong day after the FOMC, probably when Jerome Powell was in his briefing answering Q&As. And the thought is that maybe the market has identified or calling that this is the peak Fed QT, like quantitative tightening, peak Fed tightening, something to that extent, because while we know that there's probably another rate raise in September, that it's probably going to be only 50 basis points. And so, which is again expected because that's kind of what they've told us. And so if they're on track with that, that does mean that, we've gotten 75, 75, and now we might be coming back down to 50. Also, what I think that the market probably took as good news is that they didn't need to do 100 basis points today, since that was kind of talked about. They still stayed on there, 75. Okay. If it went to 100, that probably wouldn't have been received pretty well. And then, backing off from here. So they're still going to be tightening, but they're not going to be tightening as aggressively as maybe they would be before, and they aren't saying that we need to keep ratcheting up. That, I believe, is going to be the message kind of going forward and how the market takes it. That aside, and we still have GDP coming in next, so we'll kind of just see what reaction happens there. That aside, recession is next, and so we'll have to see how the recession affects the overall market, but I have been calling for the market to continue moving higher. We have been talking about how price has been getting past the daily 50. In fact, today, if you look in here, we got, it's hard to see with those arrows, but good news is we do have the MOXY indicator starting to cross over 0 today. So we got that, and you can see that price did pull back exactly to the daily 21. Now, I was prepared just in case that maybe there was going to be a little bit deeper of a pullback. That's what I have the X for. But the idea was we should be seeing a pullback into a moving average. We should see a pullback below the hourly 50, the MOXY indicator above 0. That's a trampoline move. But all of this kind of happened, overnight, because we had Google and Microsoft report earnings, and so I think that is what helped boost the market to the upside. As far as a 15-minute setup, there wasn't anything. What I saw yesterday is we had price getting rejected by the 15-minute 50 with the MOXY indicator below 0, and then we did the dip, and then we reversed. So this is going to be challenging in here because while we have been moving higher, we have been doing it in a very jilted kind of way. So very, very challenging out there. I'm going to see what happens tomorrow, Thursday, after this gets kind of settled in, overnight. See where big traders want it to go, and then what the GDP comes in and how people respond to that. But generally speaking, I do think that the markets are going to go higher, and I'm looking at eventually 415 for the S&P, and then we'll have to kind of decide after that if it's going to go higher right from there or if it's going to pull back from there. That's kind of my thought. So let's give it some time, see where this goes. It's going to be a messy, bumpy road, but let's see if the markets continue to kind of move higher. Thanks again, and I'll see you guys at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.